So I think fundamentally what everybody has to realize in GST is that it is a very collaborative process. Fundamentally you require buyer's invoices, seller's invoices to get matched to a buyer's invoice or a buyer's copy of the invoice, and I think that is going to be the crucial difference between all other forms of taxation, which are all largely just the enterprise led. They do not have to get any supportings from others. In this case, every buyer has to make sure that whatever is in his purchase ledger has to match with that which is in his supplier's ledgers. In a typical trade transaction, if you just look at it from an business to business trade perspective, at least about 5, 10, 15% of these invoices records will not match between a buyer and supplier. Or the obvious reasons are obviously the quantity does not match, so there are some rejects, the rates that were agreed in the purchase order do not match what is quoted in the invoice. There are some demurrage items, there are some contractual issues. There are a variety of reasons why these invoices won't match. Till now in trade, you basically took care of it on an ongoing basis. You just made sure that you adjusted it against future invoices, and the taxation implications were not many. Under GST, given the fact that every month by the 20th, you have to be you're filing a return, that is by 17th, you have to make sure that what you have as a buyer matches that with your suppliers, and you can only take credit for at least that condition being met. There are many other conditions also, and therefore if you look at it from a working capital point of view, you are going to have an whole amount of unreconciled items between a buyer and seller for which you will not be able to claim credit, or if you claim credit, it will be provisional credit, which if for any reason for the next 2 months it does not get rectified or confirmed, you might end up as a buyer having to pay penalty. And that's the real reason why Vayana network, which is very much focused around this reconciliation between buyers and sellers in its traditional business of financing short-term trade, figured out that it was very important for enterprises to daily reconcile the information that they're getting from the suppliers, and for suppliers also to know that the buyer's information is reconciling with them. And that's the real purpose and the reason why we've decided to bring in a very, very powerful collaborative invoice confirmation and acceptance product called VICAS, VICAS, which is Vayana Invoice Confirmation and Acceptance Service. And the idea behind that is very simple, that on a daily basis with almost no change to any of your systems, your indirect tax guys on both sides, on the supplier side and the buyer side, can have a single version of truth of all the trade that is happening between them, and they can manually and they can actually check on a daily basis any of those unreconciled items, get their procurement or their sales teams to go and reconcile if there are any discrepancies, so that by the time it comes to filing of the GSTR1 on the 10th or the GSTR2 confirmation on the 15th, you already have figured out all the items that need to get reconciled. You don't have to wait for the last date. You can on an ongoing basis get that rectified, and therefore get a lot of your input tax credit pretty much verified before you even claim it. And I think that's going to be a huge boon to not just large corporates but even for small ones, because you don't want to tie up your working capital on account of unreconciled invoices. And I think that's the reason why we think VICAS is going to be a very, very powerful draw. We've already seen an exceptionally very good response to it, and we see this as the most important thing really for GST to be successful in India, and that's really the purpose of VICAS.